Welcome to Beyond the Box, unlocking creative mortgage solutions. I'm your host and creative financing expert, Brett Clark. This podcast is for realtors looking to offer more to their clients and loan officers seeking new knowledge. We'll dive into non-QM loans, creative strategies, and trends to help you grow your business and serve clients better. Let's unlock smarter solutions and build stronger partnerships along the way. Ready? Let's get started. Welcome back to Beyond the Box, unlocking creative mortgage solutions. Last time we talked about the why. Why non-QM lending? How is it such a game changer in today's market? But today we're going to talk about the what. What are non-QM loans and what kind of products are available to us? So these loans offer incredible flexibility, so let's jump in. There are several types of non-QM loans designed to fit different borrower profiles. I'll break some of those down. We like to call them different solutions for unique needs. First up, bank statement loans. These are perfect for self-employed people. We all know that we want to write off as much as we possibly can. So instead of requiring W-2s and tax returns, some investors will allow us to use either 12 months or 24 months of bank statements, whether they're personal or business, to calculate the income off of those. This can be a huge lifesaver for people that are using those write-offs to their best ability to minimize their taxes at the end of each year. Then there's my personal favorite, the DSCR loan, which is the real estate investor specialty loan. The DSCR stands for debt service coverage ratio, which is just measuring cash flow of the property versus the borrower's personal income. So if rental income covers the mortgage payment, that's often enough for some investors. Some investors will even consider short-term rentals for that DSCR calculation. So platforms like AirDNA, your Airbnbs, your VRBOs can really help qualify people in a lot of these situations. So here's a personal example that I've got. I have a lot of clients that are out in the Surf City area that are buying the $1 million properties. Their long-term rental comp out on the islands are not sufficient for a DSCR. Being able to use this AirDNA data to truly help them get to where they need to be is enough to not only give them favorable rates, but also the qualification. So this is a huge thing, having access to short-term rental comps as opposed to just long-term rental comps as well. DSCR is a huge, powerful asset to close more loans or close more deals as a realtor every single year. Another one of my favorites is the asset utilization loan. A lot of people don't realize that this exists, but it's great for net worth individuals. People that either one are too busy to get all the tax returns and everything going, but they do have a good 401k or brokerage account, something like that, that can qualify them. This is using a calculation of their assets for income to create that debt to income ratio instead of using their employment. This is huge for people that are on the verge of retirement, are in retirement, or again, high net worth individuals that don't have that regular looking income. This could even be one of those things for people that have gotten successful quick, whether they're influencers or something like that. This is a way that we can use just what's in their bank account, just what's in their brokerage accounts to qualify them for the mortgage that they want. All right, another powerful addition to your arsenal is the interest-only loan. Sometimes people have a hard time qualifying at that full principal and interest, but being able to have access to interest-only loans lowers that monthly payment. This is also great for people that are in that short-term investment strategy where they're only going to keep it for 5-10 years and then they're going to sell, and they aren't necessarily looking at buying it down because they are looking at appreciation. These are things that interest only can be that tool to not only help qualify, but fit inside that investor strategy, looking at appreciation and cash flow. Last but not least, your I-10 foreign national loans. I-10 cater to your non-permanent residents that are here in the United States, and your foreign nationals are people that are not here in the United States but want to invest in the US market, housing market. We are looking at them both kind of in a very similar way. I-10, or the individual taxpayer identification number, are those non-citizen US residents who are paying taxes. Foreign nationals are people that are here on visas that have the ability to buy. I-10, we're still looking at a debt to income ratio. Foreign nationals, we're looking more at that asset based. But these are still, again, powerful tools to continue that flow of business in tougher times that we have seen in the last couple of years. Non-QM, don't overlook, interest only, I-10, foreign national. These are all huge things that we have available to us. So now that we've looked at the what are the different programs, let's look at a couple case studies, some real world examples from my own business. For instance, I had a client whose business pulls in $500K in revenue, but with tax write-offs, his conventional qualifying income was just $50,000. So a far cry from his actual earnings here. And so by using bank statements at even a 50% expense ratio, saying that his business had 50% expenses, we still calculated $250,000 in income, which opened the door for him into his next primary home. This is huge. This is a huge benefit using that bank statement style. So, or you could also think of the real estate investor with multiple rental properties. Using a DSCR, they could qualify based on that rental or that portfolio that they have kind of going on for experience. Each property will qualify for itself. We're going to talk in depth about DSCR because it's one of my favorites, but it is the property qualifying for itself as opposed to the person qualifying for the property. And so this is a huge, powerful tool. I have so many of these that are going on from the coast to the mountains and here in the Raleigh area, whether long-term or short-term. Each non-QM loan type brings the unique solution for a particular client need. And as realtors, as loan officers, that's our job, to look at what is the problem, what is the client need, and creating those unique solutions for them. Another example I have is with clients that had a significant assets, very limited income documentation. Really, this guy didn't have the time to really dig into everything. And he was like, I just want the quickest way to go about it, and had a decent brokerage account. And so to mitigate all of the underwriter scrutiny, we just used that brokerage account, qualified him, and we were able to close this one actually early. So another way that when we're looking at that client need, there are a lot of investors that value their time over money, or their time in the situation is just to get it done as quick as possible. These are unique situations where we're not doing all the scrutinizing of all the details of tax returns that I know all of us look at as a can of worms. So non-QM can really get you behind the scenes. Thank you so much for tuning in today. To wrap it all together, non-QM loans come in a variety of types, each tailored to fit different financial situations. The loans create new paths for borrowers, and understand these options can make a huge difference for both you, the realtor, or you, the loan officer, if you're the one that's tuning in. So I hope you enjoyed this. Please share it out with friends or colleagues who you might think that would benefit from this. Thank you so much for tuning in to Beyond the Box, Unlocking Creative Mortgage Solutions. I look forward to finding and exploring new creative financing solutions with you. So tune into the next episode and let's keep going.